Hey y'all, it's Christy Gillum.
And Christy Baker.
We are here with Keith Maynard with Maynard CPA to talk about 401k Day.
Yeah, and we've heard that you can use retirement for a down payment on a house. Can you tell us about that?
I would love to, yeah. There's a few different kinds of things, and so we're just going to talk about a few of them. So there's a couple different, most people have heard of a 401k. You guys heard of a 401k, of course. And so most of the time, and we'll start with that, we'll talk about IRAs in just a minute and kind of the differences. There's a few nuances with each one, but just want to kind of make sure you guys are aware of those. So 401ks are generally through an employer. Okay, so that's, if you work for somebody else and they have a plan in place or whatever else, they may have a provision in that plan that says that you can take a loan from your retirement account, from your 401k,
Okay.
for various reasons. And it doesn't necessarily just for buying a house, it could be for any reason, it just kind of depends. But again, each 401k, so one company might decide, hey, we're going to do that, or another company might say no. But be careful, if you ever are terminated for whatever reason, that loan is due and payable in full.
That's super important to know.
Definitely very important to know. So again, if you take a loan from your 401k and it's provided for, generally loans from 401ks are about a 5-year term, but some plans allow, if it's to purchase a home and you prove that, all that stuff, whatever else, there could be a longer period of payback. But there's some interest, and basically you're paying interest to yourself.
Oh.
You're paying interest expense, basically like you would go to a bank and buy a loan, but you're paying interest to yourself, and that goes back into the 401k.
Okay.
And so it's really important to make sure you check the plan documents. So that's a loan from a 401k. So any questions about that?
No, that makes sense to me.
So you can also do a withdrawal from a 401k. I mean, we can all withdraw from a 401k, maybe from a previous employer, current one, or whatever else. But the bummer part about that is the distribution is included in taxable income, and there's a 10% early withdrawal penalty if you're not 59 and a half. Do you like paying penalties?
No.
No, we work hard for our money. Let's
Same.
keep it.
Same.
Okay.
So we don't want to do that. So, but again, if you really found a house you like and you really want it and you're willing to pay the 10%, I mean,
We can
I've
do
seen
it.
happen. Yeah,
Okay.
I've seen it happen.
All right.
So that's kind of something to think about. One little thing, if you have a Roth 401k, have you guys ever heard of a Roth
Yes.
401k? So it's basically after-tax dollars. You can take out the contributions that you put into the Roth 401k out tax-free without paying the 10% penalty,
Okay.
but not the earnings. Okay, so if you put $10,000 in and over 5 years it grows to $15,000 or whatever else, you can take the $10,000 out without paying any penalties.
Got it.
Because it's after-tax dollars, but the earnings would be subject to the income and penalties if you take it out early. So,
Okay.
so that's the withdrawal. And so that's kind of about. Any other questions, kind of as far as the 401k?
No, I've got a good CPA. I call all my questions.
Ready? All right, you ready for IRA?
Sure.
So IRA, individual retirement arrangements. So basically, there's an interesting exception. So IRAs are similar to 401ks in the fact that any of us can withdraw. If you have an IRA or whatever else, you can take money out of that. It's included in income, and then you don't. Again, if you're under 59 and a half, you still have to pay that 10% penalty. But if you are a first-time homeowner, or if you haven't owned a primary residence in the last 2 years, I used to hear 5, but I just read this morning and kind of checked in. I saw something that said 2 years, but it used to be if you haven't owned a home within 5 years.
Okay.
You can exclude, you can take out $10,000 and you don't have to pay the 10% penalty on that $10,000. It's still income to you on your tax return for the year that you take it out, but you don't have to pay the 10% penalty. If you did take $20,000 out, you still have to pay, it would all be $20,000 of income, but you'd only pay the 10% penalty on the amount over that $10,000.
Perfect. Okay.
And as well, IRAs, you cannot do loans from IRAs generally. I haven't seen them. I don't think it's possible.
Awesome.
So that's the IRAs are a little more limited, but it's very common, especially to take loans from the 401ks, especially when I was in California. It's very common, especially with home prices there.
I can imagine. Yeah.
If you're buying $1 million house and you have to put 10% down, it's $100,000. I mean, having that much cash on hand is, I don't.
Absolutely not. How about you? No. Awesome.
Yeah. So anyway, but that's overall. But I would highly suggest, as you guys know, always consult with your CPA because there's all these little nuances, and there's things like example. There's a maximum that you can even take out as a loan for these kinds of things. And so I would always just check with your plan, your benefit sponsor, or whoever else, or your HR person that kind of facilitates the plan. And of course, on a personal level, I always suggest you reach out to your CPA if you don't have a good CPA.
I know one.
You know what?
I know a really good CPA. You guys call Keith. This is a great way to celebrate 401k Day. If you have any questions, feel free to reach out to Keith directly or reach out to one of us. We'd love to help you with those questions and or obviously buying or selling a house.